In addition to the tax preparer regulations offered by Circular 230 and Code Section 6694, the AICPA, or the American Institute for Certified Public Accountants, also offers a couple of documents that oversee the regulation of members of the AICPA. The first is the standard AICPA Code of Conduct, and that covers all sorts of conduct for members within the AICPA. But the second one, and the one that's more applicable, is the AICPA Statements of Standards for Tax Services. There are 7 of them, and you should read all 7. But I'm going to go through each one of these briefly. So, tax return positions. So we've already talked about this. So the AICPA's rule is a member should determine and comply with the standards, if any, that are imposed by the applicable taxing authority with respect to recommending a tax return position or preparing or signing a tax return. So we now know, when it comes to at least the federal taxing authority, we know what that rule is. You must have substantial authority or a reasonable basis and disclose the position. Number 2 says you should answer questions on returns. This is a little bit of a throwback to a prior era. So years ago, there weren't any questions on income tax forms. And as the IRS started to introduce them, to the extent that preparers were concerned about whether those might trigger audit flags or not, they left them open all the time. They simply didn't answer the questions. So this is really a nudge for members of the AICPA to, of course, answer the questions that are on the tax forms. So similar to Circ 230, a tax preparer need not verify taxpayer information unless you have some reason to believe it might not be correct. So, for example, if a taxpayer comes in and they have gross income of $10,000, but they have a $30,000 charitable deduction, that probably doesn't feel right, and you have a duty to check and ensure that that's a legitimate $30,000 deduction. So, of course, you can use reasonable estimates. You're not required to follow previous audit decisions, but you better be justified in departing from them. So this might be an example where you have a client, they've been through an audit. The result of the audit, either through a court case or through a settlement with the IRS, resulted in the acceptance of some sort of position. You are not required for a different client to assume that same position, but you better have justification for your departure. So similar to Circ 230, you need to notify clients of errors on prior returns. And though we kind of blew through that on the Circ 230, here's what I think makes that interesting. So let's say that you're working on a repeat engagement client. So you've been doing this client's tax return for years. And now you're working on this year's tax return. And of course, you're looking at last year's tax return to help you, and you notice an error. And not only that, but it's an error that is unfavorable to your client. So obviously at this point you're thinking, well, there's no way the IRS is going to pick this return for audit, or they would have done so already. So you're thinking, well, I could just keep my mouth shut and not worry about it. But both the Circ 230 and AICPA require that you notify the client of that error. And then similar to 230, you must also describe the consequences of what would happen if the client chooses not to correct that error. And like Circular 230, you are prohibited from breaching your client's confidentiality and reporting to the taxing jurisdiction whether they do or do not make that change. Your only recourse is to resign from that client. And then, of course, your communications must follow professional standards, and that largely is, look, important things need to go in writing. Okay, but you should go out and take a look and take a quick blow through the 7 SSTS. I've posted them in Blackboard.